How's it going, everybody? Magic Trader here. Thanks for joining. Sunday evening, October 8th, 2023. Just wanted to touch base with you and take a look at what has been taking place with the latest set of data. Yeah, interesting. I just made a post because we've been watching the insiders, the banks, amassing a pretty large long position on oil since the beginning of September. And now you see what's happening. Article out, oil could spike well worth of $150. And oil right now is currently 86. Okay, we see a big spike up from a demand area down here on the 4-hour chart. Very interesting indeed, isn't it? I don't know what's going on, man. What I do know is it seems like a lot of nonsense. I see a lot of nonsense out there. What I do know is that the banks have been increasing longs for some time now. Look at that, since beginning of September. 400,000, 428, 442, 469. Okay? Leading up until now. And so let's take a look. We're going to start by looking at gold and all that stuff. But you know, we've talked about oil for some time now. We talked about this institutional demand area down here, and we were talking about how this is a good area for a move to the upside. And that's what's been taking place. Price contacted demand and straight up. Only lately did we see some profit taking place up here. Profit taking, big push to the downside, and now we see the gap up in early trading here on the daily chart. Interesting how price came right down to that trend line there, right down to that trend line. So you know, when we look at the positions held by the banks, we can see that there's a clear bullish signal here. We look at the coloration and we can see that it's been bullish. Okay, bullish. We were in neutral territory, but now it's in bullish. 81% of their overall exposure is geared to the long side. Look at shorts. You can see shorts are all cooled off. That's why the sells are blue. When the sells are blue, that means the banks are not focusing on that position. Okay, so shorts are cooled off. It's longs that are aggressive, and they have been aggressive over the last month and a half now. Okay, so they've been accumulating along, and then now we have this Middle East situation where it looks like we're about to go to war. So that's what's going on. Okay, if you wanted to go long oil, the chart I would be looking at, let's start with the monthly chart here. This is what we have. All right, as you can see back here, we had a massive area of supply that the banks contacted, and when they contacted it, that's where they took profits on long positions that they had accumulated. Where? Right down here. Accumulated along, kept on accumulating until up here, the 120 mark, and then they took profits. Okay, now they come straight back down to that area where they were accumulating before, and guess what they started doing? Accumulating again. So can price move up there? Yeah, there's definitely nothing to stop oil from heading up there, the 115s. Okay, so if we go to the weekly chart again, look, empty chart. There's no institutional supply areas over here to stop price from rallying. So could it go up there? Yeah, sure, definitely. I'd be looking at the 118s, 116s, give or take that area. Okay, so looking at the daily chart, this is what we got. Okay, as you can see, price dropped from an institutional supply area that we had drawn out here. This is where they started taking profits on long positions, dropped price down to the trend line, and then they are now starting to accumulate again. So the area I'm watching is right here. This is a supply area. It's where the banks came in and flooded the markets and pushed price down. So that's around the $88, $89 area. So I'd want to see this area be removed, and then any retracements, we'll see likely a big push to the upside take place. So longs look pretty decent, but I'd want to see institutional buying coming in order for me to take advantage. Okay, let's go to gold. Gold's an interesting one, eh? It contacted this demand area down here. And we were talking about how we were expecting gold to rally up. Okay. We were expecting gold to rally up. We saw the push down in gold into this area of demand. As you can see, this is an institutional demand area that I had drawn out on the charts. And euro, we had some weakness coming in to play recently on the euro. But as the euro was dropping, this one was just holding nice and steady. Okay. Gold was just holding nice and steady in that demand area. And so then we had some incredibly fortunate positive data for the dollar. And so that was looked upon as negative for the euro. And then what happened? Not a drop. Well, initially a drop from an institutional supply area that we had mapped out, but then a big reversal and move to the upside. And after that took place, that's when we saw gold start to pick up steam right here. So going into this week, I do see this continuing higher. How high, don't know, but momentum is to the upside. Demand is in play, so I am expecting to see more upside in gold. Okay. Now, when we take a look at the positions held by the institutions here, what we can see is recently they were accumulating shorts. That's what caused price to drop. All right, the big increase in shorts here. Look at that, 102, 119, 137. That was taking place as price dropped. Right. So if we zoom out here, that's that big drop. The data represents this big drop here. Okay. So that's why the big increase in shorts. So since then, we've contacted demand down here. So some new things could be in play. I sense what's going to take place when we look at the next set of data is that there's going to be a reduction in shorts and an increase in longs. Right? Now, is this going to be the big move to the upside? The start of the move to the upside that we're expecting in gold? That's difficult to say because when we look at the euro chart, we can see that there's a lot of room for a move to the downside. And you can see that here too. On the monthly chart, there's nothing here until lower down here on the chart. Is there going to be significant enough demand coming in on gold for there to be a sustainable move to the upside over the very long term? Well, in order to determine that, we'd have to take a look at gold chart. Okay. So the first thing we can see is the gold chart has this structure to the downside right here. Okay, that's the first thing. Structure to the downside. So for there to be any sustainable move to the downside, first we need to see continued buying taking place from this demand. We'd need this descending structure to break through. And we need it to turn from a descending structure to a neutral structure, coasting to the right here. And then after that, we need this area to break to produce a bullish structure on the chart. If that were to take place and they came in with new buying, we would locate the areas of the new buying, and then we would buy at those areas. We would be looking to to jump on board with gold. So there is a possibility that, you know, a possibility, not a big one, but a possibility that we could see a sustainable move. But whether that's going to happen now by looking at the charts, it's I couldn't tell you, right? I couldn't tell you. Because again, the data is not telling us that there's a bullish bias right now. Right now it's bearish, but it's bearish because we just got a big drop in price. Okay? So in order to know whether or not there's going to be a big sustainable move to the upside, we'd have to look at the charts, look at the structures, and watch to see what the banks do. If they break their descending structure and put it in ranging, and then all of a sudden start building a structure to the upside, you know, an upward trend, supply being removed, that sort of thing, then I'd be interested in going long. But until that happens, I will just sit on the sidelines. Okay? But something to watch, especially now, because, you know, all this talk about war, right? Right? But if you remember back here, let's see, do I still have my notes on my charts? I hope I do. When was it? When was it that they put in the media that Russia invaded Ukraine? What date was that? Was that February 2022? I think it was February 2022, if I'm not mistaken. Right here. Yeah, right here. This big spike up here. If I'm not mistaken. Correct me if I'm wrong. And at that point, it was the same thing. We did a class on this. We were analyzing the CFTC data, the positions of the banks, and we were looking at how the banks were positioned leading up into that headline, okay? And the banks were significantly long, and they needed to offload those long positions. And then the headline came out, and it was just so perfectly timed because, you know, the books out there tell you that when there's a war, gold is a good buy, okay? And so before the headlines came out, the banks were already situated with a long position. And so when retail came in to start buying gold, guess who they were buying it from? That's right, the banks. And so we never end up going higher. We just went lower and lower. Okay. So what's going to happen now? Well, again, we look at gold. They were aggressively short recently until demand. We don't see any significant buying taking place as of yet. Are they going to use this this new headline, this new narrative, to facilitate something in gold? I am not sure. It's possible. So I will just continue to monitor the charts and wait to see what kind of structures they build on them, and then have a better determination, okay? When we take a look at the euro, you'll see, because the euro and gold are so correlated, you'll see, you know, we'll see on that chart what it's telling us based on the supply and demand, the dynamics of how things are playing out, and we'll look at potential, we'll look at any evidence to suggest a move to the upside or a move to the downside. All right. Okay, so let's go to the dollar. What do we have here with the dollar? Contacting supply. Bullish. Lately, been bullish. Okay. We talked about this with the US dollar. And the other pairs are showing evidence of this bullishness. Okay. 24, 26, 28. When it comes to longs, look at that. Shorts are cooled off. But long and short exposure, long is 75%, short 25, therefore bullish. Net positions plus 18,000. And we take a look at the dollar. It's recently contacted some supply. No trends, nothing to really dictate the movement of price on this chart. Okay, the euro is a better chart to take a look at. Aussie, very aggressive with shorts. They're taking profits on shorts. Longs have not been something that they've been focusing on. demand and play, I'm not looking at this chart, because it's not really telling us anything, and it's very difficult to read. USCAD, though, is an interesting one, because if we take a look at longs and shorts, look, remember contract expirations right here? Contracts expired. And what happens during the expiration of contracts is the banks need to reshuffle their positions. So what they'll often do is use that reshuffling as a way to reconfigure their positions. And it's like playing poker with somebody and they flash you their cards. So what happened back in September 19th, I think it was the 17th, but leading up to the date of the 19th where they have to submit their positions, we saw a significant drop from 40,000 to 19,000. 19,000 was so low, it was considered very cooled off. Okay, their positions were very cooled off, meaning they were not focused on shorts. Now, yes, they also used that time to reduce some of their longs. They dropped them down to 67, then down to 49, now back up to 61. Look at shorts in comparison. Okay, 74% of their positions are geared to the long side, and net positions is a positive 40,000. Okay, and we see the big push up. All right. We look at the USCAD. See, here's a chart. We recently got that drop. Yeah, from supply. You see, right here. We got that drop from supply. And we'll see what takes place from there. If that supply gets removed, yeah, more upside, likely. But we'll have to watch and see if that takes place. US Swiss. It just removed the supply area on the weekly chart. This is now opening up the chart for a move higher if it wants to make it. Interesting thing is we see something very similar here on the longs. An increase. Contract expirations, not much happened, but there's been a steady increase in long positions. Now we're at 27,000, aggressive. Shorts, been doing nothing. Okay, so we're seeing this constant increase in longs when it comes to dollar pairs. So it's something to pay attention to because it's just beginning. Okay. Now we go over to the euro. Okay, here we go. So the euro US dollar. You remember back in July 18 we had 264,000. I told you they were going to take profits on long positions. And so that was in July. And that was when price was right here at the highs. Okay, I told you that they were going to take profits on long positions. I told you it was going to fuel a move to the downside by closing those longs. And we've been tracking the positions of retail traders, and you've been able to see it time after time, where they are constantly luring retail traders to come in with longs and then shorts, and longs and then shorts. And you can see in the CFTC data when they offload their short positions to retail traders and when they offload their long positions to retail traders. So long positions offloaded to retail traders, long positions offloaded to retail traders, long positions offloaded to retail traders, okay? But take a look at the steady increase now on shorts. Very cooled off. Now we're a little aggressive, 132,000. That's pretty significant. As they're offloading longs. So the current theme with the euro is offloading longs, and it has been since July. But the new theme is an accumulation of a short, just like the dollar pairs. This is why I'm pointing it out, because it's important. We see it with the dollar pairs, we see it with the euro. It's not like we're just seeing it on the euro and we're not seeing it on any other thing that is correlated to it. We're seeing a massive correlation. This is something important. So I recognize these things because after years of studying the data, these are the things that give me the telltale signs of what is likely to come. So they're accumulating right now some short positions. Okay, so this is what we have here. This is what we have here. Okay, So price contacted our supply area, dropped. Some buying is taking place. They removed this area. There's probably a zone on a 1 hour chart, give or take. Could be a little bit lower. Let's see. Things happen so quickly. It's probably on a 15-minute chart. There you go. You see where price opened up? This is a buying area from the banks that took place on a 15-minute chart. Very powerful buying area. Rallied price up. Now they're coming back down. It's likely going to go higher from here. Likely. I can't guarantee it, but likely. Because as I was mentioning last week, after they removed the 4-hour selling area here, there's nothing left but for price to move higher. Then it'll contact a selling area here that was previously tested, so it'll either go deeper and then drop, or accumulate, depending on what kind of structures we see here on the lower time frame. They could continue to accumulate and break through. Bottom line is we're expecting upside momentum on the euro this week. Okay. I suspect it's going to rally, and then somewhere it's going to reverse. I think the key thing to watch here is going to be the sentiment with retail. Because at these lows, we had retail long, and they start to get into shorts, but they didn't get into shorts as aggressively as we would want for them to. Because when supply was contacted, they weren't massively short. They were more long than short. So that's not the right setup for price to reverse to the downside. They have to get them extremely short. And I think coming out with very positive NFP data last week was probably a good sign that they're trying to lure in retail traders to get in short euro. But as far as it stands now, I see short 38%. Okay? Euro shorts 38%. That's not good enough. So they're going to have to instigate something on a bigger level, I suspect. So I'm going to be watching. If price gets up here, this area, give or take, around there, and retail shorts are like 90%, I'm preparing to go in short, because I suspect that there's a very good chance we're going to see a move to the downside. Okay? You see it in the data. They're preparing. Why do you think they're spending all this time getting in short? Why do you think? Look at that. 83, 99, 105, 113, 132. Why do you think they're preparing at the lows? Why do you think they're getting in short? Okay? I think there's a very good chance they're preparing to reverse this and push it lower. That's what I'm thinking. Okay? So I'm watching for that. Anything is possible, like I said, but I suspect that we're going to be seeing price heading lower over time. Okay? And same idea with gold. All right, that's why I think gold has a good chance that we see it go lower. Okay? They've been accumulating shorts already. They're not focusing on longs right now. Let's give it a few weeks and see what they do with their longs. Yeah, they could add some longs, but that will just fuel a move to the upside. But I think the charts are telling me that they want to drop price, and this beginning stage of this accumulation is telling me that they want to drop price. Okay? So that's what I'm going to be keeping my eye on. Look at pounds, same thing. They offloaded. That's a major offload, 135,000. You remember when they were 135,000? And I told you they're going to start closing off those shorts? That was like all-time maximum position. Okay, they did. Now we're at 73. About half. They reduced half their position. And now they're focusing on shorts. So you see the same theme here. US dollar, Japanese yen, extremely bullish. Extremely bullish. We saw a significant drop. That was from supply. It stopped. Where did it stop? At demand. and now we're in a range. Okay, I'm expecting this range to sit for a while until either demand is removed or weekly supply is removed, one of the two, and then we'll see a continuation of the move. But in terms of looking at their positions to gain some evidence to make a suggestion of what price is going to do, they're starting to accumulate shorts somewhat, but longs 161,000. You know, maximum size is 237,000. I mean, we're far away from that. So this has got room to move if it wants to move. So that's something that I'm paying attention to. Am I interested in buying it now? No, I'm not. Okay. It's got a lot of obstacles. We're in a range, and I'm just sitting on the sidelines. If price was to retrace down here, yeah, potentially I'd be interested in buying if I got a long signal from down there. Yeah, but we're not there. So buying at this price so high when I'm suspecting that, you know, this is going to play out in a range, I would need the supply to be removed first. But then even then, we got other obstacles above it, which we've talked about in the class. All right, so I'm leaving that on the side burner. Kiwi, very cooled off with longs, somewhat aggressive with shorts. I don't like this chart. Nothing special. I'm not really focused on it, to be honest with you. It's not doing anything for me, so I'm not paying attention to it. S&P 500, though, is an interesting one. We'll go into the S&P. We normally don't for non-members of the school, but I'll go through it with you today. You take a look at the coloration of the cells here, and you can see that they're blue, neutral. Okay, they're not really focused on any direction right now. Longs are cooled off. Shorts were aggressive, but they became cooled off. So not much going on here. Look at the decline here. Okay, look at the decline here in net positions. It used to be minus 263,000. Now it's minus 73,000. But the interesting thing to note is that last week it got a move to the upside. And a couple of reasons. When we look at the S&P E-mini right here, you can see that we contacted some demand. Okay, it's a place that is significant. Been talking to my students about it for quite some time. Look at that. Okay, do you see that? That little test? That's institutional demand coming into play. Now, there is a chance that we're going to see a big explosive move to the upside. There is a chance. Am I buying the SPY right now? No, I'm not. Why? Well, because I see evidence to suggest that other things can play out as well. I want to see proof. I want to see proof. And what would be proof to me is, you know, we got this institutional supply area. If it got taken out, then yeah, okay. Market's going to make new highs. But I see evidence to suggest that, you know, other things could be in play right now. And we might see more lows. And we know exactly what zones have to be removed in order for that to take place. So I'm just sitting on the sidelines and watching to see how it's going to play out. Okay. We'll look at bonds. Look at bonds. Came down. Aggressive, guys. Aggressive. But I will point something out to you and mark my words on this one. Look at their positions on shorts. 319,000. What's their maximum size? 359,000. We're not that close. We're not that far away, I should say, from reaching max. What do you think is going to happen when they reach max? What happens every single time they reach maximum size with their positions? They take profits on them. How are you going to offload a massive amount of short positions? You need traders to short bonds. Interesting. This was October 3rd. Okay. This is their positions as of that. Do you think maybe they added to their bonds just to push it down just a little bit more? To create that downward momentum to the downside so that retail traders could get excited? Possibly. I think so. I think so because I've seen stuff like this before, where they get in and they create the structure on the chart so that everybody's like, you know, super excited about going in short, especially when you got characters like Mr. Ackman coming out saying that, you know, he's short, advertises it to the whole world, wants the whole world to know his position. So I'm watching this, I'm watching the numbers here. I see them getting very close to maximum size, and I think, you know what, something's probably brewing very soon. So I'll be keeping my eye on that as well. All right, ladies and gents, that's it. That is it. Thank you for joining me on this wonderful Sunday evening. Happy Thanksgiving. Hope you guys are all doing well. Hope you guys are spending some time with family. And I hope this was helpful. And don't stress too much about what you see in the news, because most of it is all nonsense. All right, that's it. Take care. Have a good one. Be well.